23 million ounces of gold. Can you really buy that for $1 or $2 per ounce? Today, we're going to talk with Mr. Alastair Still. He's the CEO of Goldmining Inc. And we're going to investigate how with his company right now, you really can buy those ounces for $1 or $2 per ounce. Alastair, welcome to Ron's Basement.
Pleasure to be here. Thanks for having me on today, Ron.
So you're the CEO of Goldmining Inc., traded on the New York Stock Exchange and the Toronto Exchange. Big company, big investors. You have a balance sheet that includes two major investments, but also you have this portfolio of gold projects that include a gold equivalent resource of 23 million ounces. Do you feel like your company has maybe just a little leverage when it comes to a rising gold price?
Actually, I would say that we actually have a lot of leverage to a rising gold price, Ron. And your analysis is quite good and very astute in these market conditions, because make it very simple math for people. We talk about a valuation very low on a per ounce basis. What we're really talking about there is taking the market cap of our company, which, as you say, trades on the New York Stock Exchange American and on the Toronto Stock Exchange. Take the market cap of our company, and if you reduce that by the cash we have on the books, we have a good, strong, healthy balance sheet, so we have cash, we have sizable equity positions in major companies that trade on the New York and Toronto exchanges. Subtract the value of those, you're left with a very small number, a few tens of millions of dollars. And you're correctly to point out, we have some 13.4 million measured and indicated gold equivalent ounces, so close to 10 million inferred gold equivalent ounces. So if you take that enterprise value divided by those ounces, which we have as 43-101 reportable resources, you come up with a very low valuation. And that valuation, to put it into perspective, we can call it $1, we can call it $5 per ounce. However you compare it, it is an insanely low valuation compared to where a basket of our peers trade at. We can all pick one or two high points to say, hey, we want to trade at $50 or $100 per ounce. And some even trade as much as $150 per ounce. But the key metric here is that we're trading at a very low valuation to a peer basket, which can be multiples of that amount, maybe 10 times the amount in some cases. So it's a strong upside valuation to our peers, which is supported by a very strong balance sheet. That's really what makes us, I think, a unique proposition. It's almost like thinking a very strong balance sheet and this free option to these gold equivalent resource ounces, all in the Americas, by the way, is a great value play if one wants to play leverage to the price of gold.
Very interesting. So I have a question for you. The 23 million ounces located in Brazil, some in North America as well. Do you have plans to unlock the value? I mean, are you advancing? Are you exploring, developing? How would you categorize your activities in regards to unlocking more value in those ounces as well?
Absolutely. It's a great question. And in fact, we have 8 projects right now, and we are in Brazil, Colombia, Canada, the US, and one project in Peru. So all solid mining jurisdictions in the Americas. Those gold equivalent ounces, it's about 80% of the value is in gold. So we do have some exposure to copper. It's close to 20% of the commodity exposure is to copper, which I think is a great co-occurring metal that comes with our gold and a couple of our bigger assets. I think that's a great metal to have exposure to without being a primary copper producer. So there's a great mixture of metals there in the right jurisdictions. And yes, it's really all about unlocking value from those projects. There's currently 8 projects we have right now. Each of them have more than 1 million gold equivalent ounces in them. So they're all sizable projects in great jurisdictions. And we're taking a very disciplined approach to managing our capital, but unlocking value. And really, I think the track record that we have shown over the past couple of years of unlocking value is really what we want to expand on and continue with going forward. And let me just give a couple of quick examples. It was just over 2 years ago that we launched a new company called Gold Royalty Corporation, where we wrote small royalties on the assets within our portfolio, brought in a very experienced management team led by David Garofalo, the former head of Gold Corp, one of the largest producing gold miners on the planet a few years ago. Brought him to run a royalty company, And based on the strength of assets in our portfolio, the royalties on those, they raised $90 million on the New York Stock Exchange. So that company was launched, and that's what today we own approximately a 15% stake in that company. So that's one of the core holdings. If we were to create value, it really none existed beforehand because we hadn't written royalties on these assets. We raised that value, put that on the books, and that's on the balance sheet now in a publicly traded company on the New York Stock Exchange, NYSE American. So that's one example of how we've created value. There's two other key examples I can also illustrate is that over the past year, we've also prioritized and rated and ranked our projects. We brought in a new vice president of exploration, a gentleman named Tim Smith, a very experienced geologist who we brought over from Newmont. And Tim was leading North American generative exploration, the largest gold miner on the planet. And when I can get someone with his experience to come work for us, it speaks volumes, I think, not just about his credentials, but what he thinks about our portfolio. And with support of Tim, we drilled one of our projects in Colombia called La Mina, and specifically the La Garucha target at La Mina. We made a new discovery there. We added over 1 million ounces of gold equivalent into our inferred category. So it's tripled the inferred category resources. So a new discovery. That led to a preliminary economic assessment, which we launched at mid-year this year. And that showed on that one project alone, the net asset value on that one project of $279 million. So that's just one of our 8 projects. That's crystallized value. That's shown that there's real robust economics and good, strong resource that has the potential to be developed into a sizable mining operation there in Colombia. So we've been able to spin out assets. We've been able to drill assets. And the third exciting adventure we've just undertaken earlier this year, we launched a new company called US Goldmining Inc, which really focuses on one of our key assets that we have in Alaska, one of the great mining jurisdictions on the planet. And it's great to have resources on American soil, where we launched a US-based company with a project in Alaska close to 9.5 million gold equivalent resource ounces. And so a sizable deposit in a great jurisdiction. We launched that on the NASDAQ earlier this year. We raised $20 million. We're currently drilling on that project right now. And gold mining has about 80% of the shares in that company. So crystallized real value on the balance sheet. So just 3 examples of how we have moved forward, created real value for our shareholders.
Okay. So I'm a shareholder myself. I want to make sure I have this clear. You have the market cap of the company. But then there's 2 large investments. One with USGO, the Alaskan Gold Project you just referred to, and the Gold Royalty Company. And then that little bit, and cash and some other assets, and then that little bit that's left over that really, in terms of the market cap, represents this giant 23 million ounce resource. But to make things maybe even better, and please correct me if I'm wrong, you're working to advance and expand the 23 million ounces, maybe move it through the exploration development phase to add value, accretive value for the shareholders.
Absolutely. That's our real mission, is to unlock value from those underappreciated assets in our portfolio. And we've got a strong balance sheet to move forward with that. We have an experienced exploration team who worked for the major operating and development companies throughout the world. So a strong balance sheet with good assets and really seeing little value on those right now. That's the tremendous opportunity for shareholders. The re-rating of those ounces, not just dependent on the price of gold, but actually unlocking value ourselves, which coupled with a rising gold price environment really has the opportunity for some very significant upside on the share price when those ounces get better appreciated. To put it into perspective, I'll give another example, is that over the last 10 years, a lot of mining and exploration companies have really been capital starved. They really have not had the capital available to them for exploration. The result of that has been that the major operators, and this is on a global basis, have seen a very significant overall global decline in their reserve bases. So what does that mean? Those major operators, that means the pipelines to feed their growth and their existing operations is not there. So they're forced to do 2 things. One is which they could ramp up exploration, which is a long-term game that can take some time and take significant money, or they can go on the acquisition trail to try and acquire ounces to fill the pipelines to meet their existing production profile and future needs. That's where I think the opportunity lies within our portfolio. These are scarce assets we have. They're in good jurisdictions, the type of assets that the majors need right now to fill their portfolio. So it's really about us making sure those assets are highlighted, accentuate the value on them, make them very attractive to potential acquisition from larger companies as well. Another way to unlock value from our portfolio.
Yeah, so over the last 10 years or so, the major producers, the big mining companies, is it accurate to say maybe they were more focused on shoring up their balance sheets, paying off debt, trying to survive in what at times was a difficult gold environment, and they did that at the expense of their pipeline, their exploration pipeline, and that there's going to be a point here, maybe in the coming years, even coming few years, where they're going to be looking and saying, look, I mean, the mining business is a depletion business. They're going to need to refill that pipeline, and they're going to be looking for a solution, and quite possibly Goldmining Inc. might be available to offer a solution at that point.
Absolutely. I think you've got that exactly right. The major operating companies were really under a lot of pressure to shore up their balance sheets. And in particular, one of the focuses that was really not a focus for gold companies several years ago was they started to pay out dividends. So in order to pay those dividends, they were looking at ways they could find that available cash. And it seemed a good short-term solution to starve exploration, but that's really your future. And that's really where they're now paying for that lack of investment into the future. That's what makes the scarcity of assets we have that much more sought after and appreciated. And that creates an excellent opportunity for us to daylight value from those assets we have, which we think are very scarce in this environment and in the most stable jurisdictions that we can speak of on the planet.
Yeah, it's almost like, as I think of your company, I feel like you have a vault with 23 million ounces of gold sitting in it, just waiting for the right conditions to develop, where it can harvest a much greater value or price, I guess you could say, than it is now. It feels like to me, and it can be a difficult concept to understand, but it feels like to me that from a strategic perspective right now, I'm a very value-oriented investor, that there's just incredible value with a company like yours, that there's more value created in the development phase, like you're doing with your portfolio projects, than maybe even a currently producing company, given the current environment, that strategically there's more value being created in the development phase. Am I correct in that?
Well, I think so. And I think also, particularly since the market is giving us such a low equity value, you start looking at the enterprise value on a per ounce basis, they're giving us so little value for that. It creates tremendous leverage for upside. And then the upside is something that we can control ourselves. Yes, the price of gold will be like an accelerant onto the fire if we put that into the mixture as well. But when we have the ability to unlock value ourselves combined with a rising gold price, that's a tremendous combination. And the other thing I would add there too is the optionality within a larger portfolio. We're not talking about a single source project which relies on one project making it or breaking it. That puts another element of risk. When we have the diversity of 8 separate projects, that gives a lot more flexibility, a lot more options we can look at. And one element we haven't even discussed today is, because we're a larger company with a strong balance sheet, we have a relic asset in our portfolio, which is actually a uranium project. It's a property with some 125,000 hectares in the Athabasca Basin of Canada, which is home to some of the highest grade uranium deposits on the planet. And it's buried in our portfolio, and not one of our focused areas, but just another great example of optionality within a large portfolio. And uranium is a very hot metal these days, a lot of demand for it. That's another opportunity we have to further unlock value from our portfolio, which really sees no value right now. So tremendous upside for a great lift as we start to unlock value from that portfolio.
Yes, and I would say that with 23 million ounces, you're definitely benefiting from economies of scale, right? If you're going to do the work on a large or on a gold portfolio, it becomes much more economic to do it on a much larger number, which is certainly what you have. When it comes to the uranium project, I heard it once said that region where your project is located is the Saudi Arabia of uranium. Is that correct?
I haven't heard that expression, but it does make a lot of sense. There's a number of outstanding deposits in that district, and they say we do have very sizable land holdings there. And I think there's an opportunity that most people don't even know we have a uranium property. And I see junior explorers in that district, and they're raising $50 or $100 million on, on postage stamp exploration projects. And I see this project in our portfolio. It's waiting to be daylighted. So that's a great example of the optionality within this large portfolio. And I think really the simplicity of the model is quite simple. Any investor I would encourage to do their own homework, do their own research, but look at the basics. Look at what a company needs to have. You need to have high quality assets. We have that, and we've mentioned the 13 million and measured and indicated, and 10 million ounces gold equivalent and inferred. That's a significant portfolio of high quality ounces. Look at the balance sheet of the company. We've put in sizable value onto our balance sheet. It's over $100 million on the balance sheet, with cash and strong equity holdings trading on major exchanges. So liquid assets and cash. And then look at the management team. Look at who they've worked for. Look at the companies they've done work for in the past. And my own career, the first almost 25 years of it, I worked for the major operating companies, the Newmonts and the Goldcorps and the Kinrosses. So we know how to get projects done. We know what it takes to move a project along. And it's that experience, the strong balance sheet, and a great portfolio of assets really makes for the winning combination, I think.
Yeah, I wanted to mention that. I was saving that for the end, that you worked for Newmont, Goldcorp, Kinross, and Agnico Eagle, and one more major player, I believe, as well.
You could throw Placer Dome in there, which was a predecessor to some of those. So yes, in a variety of roles at operating site level, exploration. I've been in South America building mines in Argentina. So I've seen the whole spectrum across the mine building universe and across a number of different countries. And I think this is an exceptional opportunity to be investing in gold. There's a fundamental disconnect right now between the price of gold, which as we're talking is close to $2,000 per ounce. There's a disconnect between that price of gold and the price of gold equities. And I think no better way to play that disconnect and play the opportunity than a company, GoldMining Inc., which provides tremendous leverage, not just to the price of gold, but to this undervalued portfolio of assets as well.
Yeah, and I want to point out, and you did a great job of mentioning this, but I think it's important to point out that when we're doing these valuation calculations, we're using cash, which is cash, and we're using marketable securities, liquid marketable securities, to come to this conclusion that with GoldMining Inc. right now, you really can buy ounces of gold in the ground for $1 or $2 per ounce. I don't know that it can get much cheaper. It's the market has created some mispricing opportunities, and I think just outstanding at minimum value opportunities. And when you have a company like yours with strong people, strong assets, I think the future looks very bright. If people want to learn more about the company, how should they do that?
Very easy to do. Quick visit to our website, www.goldmining.com. And I emphasize again, we trade on both the New York Stock Exchange American, and GLDG is the ticker symbol. And on the Toronto Stock Exchange, very easy ticker symbol, GOLD.
I might add the easiest ticker symbol to remember.
Exactly.
GOLD. Thank you for your time on behalf of all the viewers that have watched and learned a great deal about the company. Alastair, thank you for your time, and we will look with great expectations for the future of GoldMining Inc. and look forward to talking to you more in the future.
Thanks for having me on today, Ron. Look forward to providing an update to you and your viewers sometime very soon.
Thank you.
Bye now.